Imagine investing $10,000 in Tesla back in 2011, when it was just getting started. How much do you think that would be worth today? Maybe you're guessing $30,000 or $40,000. Guess again. You'd be sitting on nearly $1.5 million if you'd invested that amount the day Tesla went public. That was a bold, risky move. But the good news is that similar opportunities exist today, and you can seize them by following the steps I'll outline here. Let's dive in. First, a huge congratulations if you've saved $10,000. That alone puts you ahead of most people who struggle to set aside even a few $100s. It shows you've got discipline and determination. Now, the big question is, what's the next step? How do you channel that hard-earned money to make it grow exponentially? There's no one-size-fits-all answer, but there are several proven paths worth exploring. Let's break them down carefully so you can find the one that aligns with your goals. One powerful option is investing in individual stocks, particularly in high-growth companies poised to disrupt their industries. Over the decades, companies like Amazon, Apple, and Tesla have delivered returns that exceeded even the wildest expectations. You don't need to pin all your hopes on finding the next Tesla, though. Diversifying your $10,000 across a small portfolio of promising tech, biotech, or green energy companies can reduce risk while keeping the potential for massive gains. The stock market can feel like a roller coaster, with prices swinging up and down. But if you're patient and select companies with strong fundamentals, your investment could grow significantly over time. Researching market trends and understanding a company's vision are key to making informed choices. Another critical strategy is to stay patient and wait for truly exceptional opportunities rather than chasing every hot tip. Too many people fall into the trap of FOMO, fear of missing out. They hear about a skyrocketing stock or a trendy investment and dive in without proper research, often losing money fast. Instead, follow Warren Buffett's golden rule: don't lose money by being reckless. If you haven't found a standout opportunity, it's perfectly fine to park your cash temporarily in a safe, low-risk account, like a high-yield savings account or treasury bonds. Waiting for a market correction, a dip in a stock you trust, or a company with a mission you believe in is smarter than forcing an investment out of impatience. Patience can be your greatest asset. You might also consider leveraging tax-advantaged accounts, like a Roth IRA if you're in the US. Why a Roth? Because it allows you to contribute after-tax income, invest it in assets like stocks or funds, and withdraw the profits tax-free after reaching retirement age. Imagine allocating a portion of your $10,000 to a Roth IRA and investing in a broad market index fund tracking the S&P 500. Over decades, thanks to the magic of compounding, your money could grow into a substantial nest egg. Even if you don't have a full $10,000, smaller contributions, say $2,000 or $5,000, can still compound dramatically over time. The key is to start early and stay consistent, letting time and market growth work in your favor. Entrepreneurship is another exciting avenue. With $10,000 or less, you could launch or scale a small business, especially in the digital space where startup costs are often minimal. Think about starting an e-commerce store selling niche products, offering consulting services based on your expertise, or creating a digital product like an online course. Your $10,000 could cover essential tools, website development, or initial marketing campaigns to attract customers. The beauty of entrepreneurship is control. You're the one driving the vision. If your business takes off, the returns could far surpass those of traditional investments. Of course, the risks are higher, so thorough market research, a solid business plan, and a willingness to adapt are crucial to success. Real estate remains a timeless wealth-building strategy, though $10,000 alone might not buy a property outright in most markets. Don't let that discourage you. Creative options exist, like partnering with friends, family, or investors to pool funds for a rental property. Alternatively, explore affordable niches such as mobile homes, self-storage facilities, or real estate investment trusts, REITs, which let you invest in real estate without owning physical property. Real estate's power lies in leverage. You put down a portion, the bank finances the rest, and rental income can cover the mortgage while the property appreciates. Over time, you build equity and potentially see significant returns, far outpacing the growth of a standard savings account. If you prefer a more conservative approach to balance risk, Consider allocating part of your $10,000 to index funds or exchange-traded funds, ETFs. These funds track broad market indices like the S&P 500, offering steady, reliable growth over the long term. While you won't experience the thrill of a stock soaring 1,000% overnight, you'll also avoid the devastation of a single bad investment wiping out your savings. Index funds are low maintenance, beginner-friendly, and let you benefit from the economy's overall upward trajectory. They're ideal for those who want growth without constantly monitoring the market. Even if you're starting with less than $10,000, maybe $3,000 or $5,000, the same principles apply. Begin modestly, perhaps with a diversified fund, and keep saving until you spot a clear opportunity. The journey to wealth is about consistent progress. What sets successful investors apart is their commitment to education. Don't blindly follow social media gurus or unverified tips. Build your financial knowledge by reading books, watching reputable financial content, and staying informed about market trends. If you're eyeing real estate, learn from experienced investors. If you're starting a business, study successful entrepreneurs and connect with mentors or communities for guidance. The more you know, the more confident and effective your decisions will be. Another smart move is maintaining an emergency fund. If you pour all $10,000 into risky ventures, an unexpected expense, like a medical bill or car repair, could force you to sell investments at a loss. Aim to keep 3 to 6 months' worth of living expenses in an easily accessible account. While it may not earn much interest, this safety net protects you from financial panic, letting you pursue growth opportunities with peace of mind. Once your emergency fund is secure, every extra dollar can go toward wealth-building strategies. Discipline is your secret weapon. It's tempting to splurge when you see your investments grow, but reinvesting profits fuels exponential growth. The wealthiest investors rarely cash out their gains early. They might take a small portion for personal use, but they let the bulk continue working, compounding over time. This reinvestment cycle is how modest sums transform into fortunes. Short-term thinkers miss this, chasing quick rewards instead of long-term wealth. If you're unsure which path, stocks, entrepreneurship, real estate, or a mix, suits you, experiment on a small scale. Invest a portion of your $10,000 in a basic stock portfolio. Test a side hustle on weekends, or research local real estate listings to understand the market. These small steps will reveal what aligns with your skills, interests, and risk tolerance. If one approach doesn't work, treat it as a learning experience, not a failure. Adjust and keep moving forward. Stay optimistic. $10,000 is a powerful starting point. Many millionaires began with less, but succeeded through consistent, informed action. They didn't let their money sit idle, losing value to inflation. They believed in their ability to learn, took calculated risks, and adapted when needed. You can do the same, even with smaller amounts. Whether you buy promising stocks, launch a side business, or invest in a small real estate deal, think long-term. Wealth builds gradually, with each success stacking on the last. By staying patient, educating yourself, and reinvesting gains, you create a system where your money works tirelessly for you. In summary, if you've got $10,000 saved, start by defining your priorities. Secure an emergency fund, then seek opportunities in stocks, real estate, or a business venture. If you're uncertain, test multiple paths on a small scale. Keep costs low, curiosity high, and let go of FOMO-driven impulses. With patience and discipline, that $10,000 can lay the foundation for a prosperous future. Don't let it languish in a bank account. Put it to work and watch it multiply. If you found this inspiring, like and subscribe for more wealth-building insights. I'll see you soon.